Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Ekta Batra, turning out to be a fantastic Friday for the Bulls. So much action and something we'll discuss with the management conversations and stock-specific news as well, Ekta.
Hi Sonal, yes absolutely. So we have a action-packed 30-odd minutes, but first up, all of the top stories. Markets trade at the day's high on the back of strong global cues. Mid-caps outperform, realty and IT surge, mid-cap, pharma and healthcare lag.
Glenmark Pharma rallies on good Q1 numbers and commentary. Company reports improvement in margins and profitability. Stock jumps over 5%.
Polyplex surges over 7% after reporting good numbers in Q1. Revenue up 8%, EBITDA up 170% on a year-on-year basis. Other packaging film stocks like Uflex, Ester also surged between 6 to 10%.
Positive commentary from JP Morgan boosts realty firm DLF. The stock is higher in trade. The brokerage issues an overweight call and raises target to 1,000 rupees. Says the company may surpass $1 billion operating cash flow at group level in FY25. Okay, all right. Those are the top headlines that we are tracking for the markets. It's a full 300-point gain that we are seeing on the Nifty. Mid-caps are powering through. That's almost a 900 gain there. Markets are at the day's high, and it's all courtesy Nifty IT because that index has surged and how it's almost a 3% gain on Nifty IT that we are seeing right now. And across the board, there are big moves that we are seeing. All the sectoral indices, they are in the green right now. Even Nifty Pharma, which was slightly on the redder side, has come off from the lows of the day. So a lot of action, stock-specific moves, and we are done with earnings now. So it's mostly on news flows that we are getting those moves. So a lot of action there. The small cap index too is higher, 1.7% there, and a lot of action in the broader market.
Well, yes, Sonal, a lot of action in the broader markets. Well, we have the mid-cap index, which has surged around 1.5%, and the advanced decline ratio, which is positive as well. You were talking about the IT index. Just look at it on a week-to-date basis. It's gained around 4% plus. And compare that to the Nifty in terms of gains on a week-to-date basis. There's a clear outperformance which has come in for the Nifty IT index. But nonetheless, we do have a lot of ground to cover when it comes to specific stocks. It's a buzzing market. This is our segment, Mid-Cap Movers. We have with us Hormuz to take us through all the mid-caps that are moving around today.
The bulls certainly want to end the week on a high, slowly but surely, and there are plenty of stocks and more that have been buzzing around in today's session and can't not start off with Ola Electric. There 20% on an upper circuit this afternoon after the earnings, the launches, HSBC initiating coverage with a 140 rupee price target. It's already at 133. Sona, BLW Precision, Piramal Enterprises after the 10% fall that it saw on Wednesday is seeing a bit of a recovery today, and Paytm continues to see some gains in today's session. We are done with earnings, but earnings reactions are continuing in today's session. RHI Magnesita is one of them. It's seen a significant correction from the highs of the day, but still 7.5% higher among the top gainers on the Nifty 500 today. Polyplex is the one. Returned to profitability this quarter, as did Madras Fertilizers, both of them seeing healthy gains in today's session. You spoke of IT and the gains majorly coming from the mid-cap end of things. First Source up 7.5%. It continues to move regardless of the market trajectory. Emphasis, Zensar, Birlasoft has been an underperformer. Even that is seeing gains of close to 6% at the highest point of the day today. Some stocks doing well on the back of very strong volumes, and they'll come up on your screen. Glenmark is an earnings reaction as well, 5% higher. Management commentary positive as well. L&T Tech, PVR, Inox, MapMy India, all of them seeing gains of anywhere between 5 to 6% on very strong volumes. And lastly, some stocks that are bucking the trend, there are few and far in between. Hindustan Zinc is one of them, 7.75% lower now. Varun Beverages and Aurobindo Pharma had a bit of a gash when the warning letter news came in, fell around 6%, but now has recovered from the lows of the day, currently trading 2% lower. Back to you guys.
Okay, all right. Thank you so much. That's a long list of movers in the broader markets. Thank you, Hormuz, for joining in. It's a good time to get a technical check on the markets as well. Himeen Kapadia of KR Choksi Securities is joining in. Himeen, good afternoon. Thank you so much for joining in. We are seeing a big comeback, 300 points higher on the Nifty. Mid-caps doing well. Do we see more legs to this rally, we'll see some consolidation? What are the charts suggesting?
A very good afternoon to you, Sonal. Thank you for having me. Sorry, the pleasure. I think two things. The VIX is cooling off. Maybe the geopolitical tension is still there in the background, but the VIX has been coming off slowly and steadily, Sonal. So that is one thing in favor of bulls. Otherwise, there have been two bearish gaps, Sonal, on the daily chart as far as the Nifty is concerned. And that gaps, and both those gaps have not yet been covered up. This is the third attempt we are making, Sonal, at covering up these gaps. Now, two things. These gaps provide resistance, and till they don't get covered up, that negative overhang will remain and pressure will be omnipresent. So these gaps need to get covered up. We are making that attempt. So hopefully they get covered up. Till then, it's going to be iffy. There wouldn't be a trending bias, and it would be extremely script specific, like the IT index that you mentioned. So I would say fingers crossed. Two bearish gaps, one's a big one. So I don't think that's going to get covered up today. That looks willy-nilly impossible.
Okay, all right. But specific stocks, Hemen, what's your approach today?
Yes, Ekta. I think like Sonal mentioned, I think the IT index, higher tops, higher bottoms, we are in an intermediate uptrend. And even if you look at the charts, Ekta, longer term point of view, just last month, we had posted a fresh all-time high. So IT index looks good. We've had a 1.5 year correction set for further highs. And we've also had a couple of weeks of a downward movement. So a buy on HCL Tech, the logic is all the mechanical indicators are in a buy mode. It's about the 55-day exponential moving average, higher tops, higher bottoms. We are set to make a new all-time high. So one can buy HCL Tech at around 1660, stop loss of 1630, target of 1720. And the second stock, Ekta, would be a contra buy call on Axis Bank. Well, banks have been abysmal. They've been corrective for a long time, even longer than the Nifty, and they haven't been performing. But now Axis Bank is staging a comeback. We are playing for a contra buy call. Currently, it's a recovery, not a rally. Same logic applies, high tops, high bottoms. All the mechanical indicators have given a crossover buy, some after reflecting positive divergence, fallen off from 1340 to 1130. A short-term bottom has been made, so we are riding piggyback on this. One can buy Axis Bank at 1165, stop loss 1140, target 1215. It's a modest entry, small target, small stop loss, small target. I believe it can surprise.
All right. Okay, Hemen, thank you so much for joining in with those technical picks. We'll speak to you soon again. Let's slip into a short break now. When we return, we'll be joined by the management of EPL to discuss the quarter gone by and the outlook going ahead. Stay tuned for that. Welcome back. It's time to focus on EPL. Company reported a good performance in quarter one with healthy growth in revenue and profit, and operating margins also expanded. Management says they will sustain double-digit growth in FY25 with 20% plus margins. To talk more on that and the outlook going forward, we are now joined by Anand Kripalu, MD and Global CEO at EPL. Mr. Kripalu, good afternoon. Thank you for joining in. The street seems to like the fact that you're sticking to your guidance, 20% plus margins, double-digit growth. I wanted to understand if this is achievable in FY25 itself, because you're right now at 18% margins. Will it be led by any particular geography or any product mix changes that you'll do? What is making you so confident of achieving this number?
Well, good afternoon, and thank you for having me on this program. Yes, we're actually very pleased with last quarter's numbers in terms of growth, margin, as well as PAT. And our absolute EBITDA growth also was really, really solid. Just a point, our margin last quarter was 19.1%. And the guidance that we've given is that our plan is to have sustainable double-digit growth with 20 plus margin. Now, we haven't very specifically said exactly when that will happen, but that is exactly the plan that we are working to. And we are absolutely confident that we will be able to consistently improve our margins as we look ahead towards that goal of 20%. So whether it will happen next quarter or by the end of this fiscal, I don't want to commit. But that is absolutely our guidance. And we have consistently been making progress towards the guidance that we've given.
Okay. You sound extremely positive in terms of the margins, but just wanted to understand, sir, in terms of Egypt as a segment, that's been seeing some amount of currency devaluation. There's some headwinds in terms of demand. What does it mean as a segment for you all in terms of the geography and as well as the margins within that space?
So Egypt is actually a relatively small part of the business. Last year, we had to take an exceptional provision because of currency devaluation. The advantage now is that the currency is more free-floating, and therefore there is going to be no surprise in terms of currency loss. And what we're doing is trying to sweep whatever currency we have locally there and move it out of the country as fast as possible. Having said that, I just want to say that our demand and momentum in Egypt is really bouncing back, despite the fact that it's sitting at the foothills of a very troubled zone in the Middle East. Despite that, our domestic demand in terms of this volume and revenue remains very, very solid.
Okay. So, you know, the EAP geography this time around has done well with margins of around 22%. You've seen reasonable revenue growth as well. Will this be the margin number going forward in this segment as well? What is the product profile here that margins are better? And will this lead to the growth that you're talking about in margins going forward?
So actually, as far as the overall margins for the company are concerned, I think the delta is going to come more from Europe and the Americas, okay? And that's what we've seen even in the last quarter. Now, EAP, to your point specifically, is already in the zone of margins that we're trying to operate in. And our performance in EAP is, while the large part of the business is still oral care, the contribution to growth has been very significantly coming from beauty and cosmetics. That's been innovation-led. A large part of that is to do with what we call local kings. So, you know, local brands that that actually are doing very well in China and really test our capabilities in terms of innovation. But also importantly, as we innovate, we also get a margin uptick because it's more premium, and therefore we have better margins with those kinds of offers. So I think our ability to sustain EAP at these levels of margins, but drive growth more importantly, through accelerated beauty and cosmetics performance is really what we are aiming to do.
Okay. All right. That sounds interesting. But the other segment that, you know, the other geography which you've seen some amount of traction from is Brazil. You've seen some amount of customer acquisitions there. You've seen some 2 new MNCs come on board. Give us a sense in terms of these kind of markets where you spoke about the personal care segment seeing a lot of growth. But Brazil as a segment, what are you, where is the growth coming from? How much is it growing? What are you anticipating?
So first of all, we're very excited about our greenfield entry into Brazil. We've been producing on the ground in Brazil for almost a year now. And we took less than a year to set up a plant in what is a very complicated country to do business in. So we're very pleased with how we've executed that project. Our anchor customer and the anchor volumes for Brazil were predominantly in the oral care segment. But what's happened is the moment we set up shop on the ground, we have actually been very pleasantly surprised with the kinds of inquiries we've had from other multinational companies beyond our anchor customer, as well as a lot of local companies. So the way we are looking at it is that, of course, this year Brazil will contribute to growth because it's not there so much in the base. But we're excited about the fact that we will continue to expand our customer base and continue to expand our business well beyond oral into hair care and other beauty and cosmetics brands, both multinational and local. So while Brazil is still relatively small to our total business, and it's becoming a meaningful contributor to our Americas region, we believe in terms of contribution to growth, it will sustain certainly for the next couple of years.
Okay, so just to follow up on that, Brazil's utilization levels were at 65 to 70%, the last known number. What does it increase to, the new plant? And the second part is the sustainable tubes. What is it as a percentage of revenues right now? In Q4, it was at 21%. Are the margins here higher for you?
Yeah, so as far as Brazil is concerned, our utilization is about 70-odd%. And I think the good thing is the civil that we've created in terms of just the structure of the factory, as well as utilities and so on, we have invested in for much more volumes in the future. So it's a modular factory. As more demand comes in, it'll take us 6 to 9 months to put in a new line and start producing more tubes. Okay, so we can operate in a very agile way there. And the moment we hit a circuit breaker of 80-85% utilization, I think we will go and start expanding. To your point on sustainability, we are actually very focused, but also very excited about our journey on sustainability. Sustainability for us is not just the tube, it's about being the most sustainable packaging company in the world. And that's why we were awarded EcoVadis Gold last year, and we're well on our journey to get to Platinum by next year, which will put us in the top 1% of companies worldwide. Now, this quarter, 29% of our tubes were fully recyclable, right? So sustainable, up from the average of 21% in FY24. So what we are seeing is now an accelerated demand from our customers, and our objective is to stay one step ahead as far as our ability to supply sustainable tubes is concerned. To a last point on margins of sustainable tubes, you know, you always have a choice when there is a discontinuity in the marketplace. You have a choice to say, am I going to use this as a driver of growth and an opportunity to grow my share of the total tube market? Or will I be opportunistic and charge more for it? We are doing the former and not the latter. And we have actually seen in the last quarter good improvement in our wallet share, because we are more ready than others to supply sustainable tubes. So we are seeing good increase in wallet share, particularly in oral care.
All right, that point is taken, and congratulations on your sustainability efforts as well. Completely run out of time. Thanks very much for joining in and speaking with us. So that's EPL. Stock has done well, up 23% this year. We'll take a break and be back with more. Stay tuned. Welcome back. Well, for the markets holding up well, we have the Nifty, which is up around 327 odd points. We have the mid-cap index, which is up a cool over 900 odd points at this point. A lot of stocks which are buzzing around in within the entire space. So RVNL is up around 3 odd % from the broader markets. Remember that stock has already gained over 200 odd % year to date. And a couple of these pharma stocks are now seeing a bit of a comeback. But we need to wrap up on the show. Stay tuned. Your stocks will take all the action forward.